Here we have the parent company. Definitely what will happen? Parent company acquires, purchases subsidiary company in terms of what? Mostly in terms of equity. Is it? Mostly in terms of equity. What is the condition when we are doing this? It should be, it has to purchase more than 51%. Definitely when you are doing the thing, there are so many things which have to be merged. Is it right? The parent company financial statements as well as the subsidiary company financial statements has to be merged. Is it right? And when you are doing this process is called as consolidation. Is it? This process is called as consolidation. It is very specialized topic as such. Is it right? Now we are talking about now when you going to work on these consolidations, make it sure that we are going to do adjustments. Is it right? We are going to do adjustments only to the financial statements of subsidiary only. We are not going to touch anything with respect to parent company. Whatever is there, we will divide. We divide between parent and subsidiary company. Parent company share will be merged with the parent company. Subsidiary company is called as non-controlling interest. Yes. Why? Because it is called as non-controlling interest. It will have less than 51% of the equity shares. Is right? It will have less than 51% of the equity shares. In this process, is right? In this process, we will have so many things. This is what you say. We call it as a non-controlling interest. Is right? We call it as non-controlling interest. We are talking in terms of see what happens. Assume today is what? Assume today is what? 13th of 11, 2022. Is it right? Now today you have bought it. Is it right? Today you have purchased it. Parent company purchased today. Now what happens? We are going to take into consideration subsidiary company only. Is it? Subsidiary company financial statement. Definitely subsidiary company financial statements, there will be some profits or losses. Is it right? Now the issue is not with losses. Is it? The issue with profits. Now when we do the things, is it right? Whatever the profits there before, is it right? Whatever the profits there before, is it before 13/11/2022, these profits are called as pre-acquisition profits. Is it? The pre-acquisition, before acquisition, and these profits are called as post-acquisition profits. Means here also what we are going to do, we are going to make sure that there will be date is important. On the date, after the date, it is post-acquisition profits. Before the date, it is pre-acquisition profits. Okay. Now what we are doing, we will going to distribute that. We will distribute the pre-acquisition profits and post-acquisition profits. This is the first adjustment we will do. Second one, we are talking in terms of whatever the share of, is it right? Whatever the share of subsidiary company, is it right? Whatever the share of a subsidiary company, it is called as a non-controlling interest. It is called as a definitely what will happen in this process? In this process, there will be some transactions will be there. I told you they are going to be intra-group trading. Is it right? What happens? What is the thing you are talking in terms of parent company? Is that we are talking in terms of parent company? We are talking in terms of subsidiary company. See, there may be some purchase or sales. Is that these people are purchasing and these people are selling. Is it right? To whom they are selling? They are selling before. Is that before there is an acquisition? That's buying and selling. Now what will happen for these people? This is going to be called for them it will be receivables, and for these people it is going to be payables. Is it? Definitely. Any intra-group transaction trading is there, we will going to take into consideration. Is it? And when you are doing the things, one of the critical, is it one of the, I cannot say difficult, but it is very, very simple. Once you understand, it's nothing like that. But it is very, very challenging that what is happening, we have to think about what? Unrealized. Unrealized profit is nothing but you are selling and you are purchasing. Is that it happening between the subsidiary and the parent company? Now, actually what happens if once we are making a consolidation, is it right? Once we are making a consolidation, it's very simple. Unless until it is sold to third party, it should not realized as a profit. Okay. See, your subsidiary selling to parent company or parent company selling to subsidiary, there will not be any profits, will not be there. Is it right? Once you are coming together, before you are planning to be working differently, fine. Is it? I am parent will sell to sales XYZ. Is that what happens? Keep it in mind. It will be more. Previously, you used to have XYZ company. Is it right? It is ABC company. Now, ABC company is selling to XYZ and XYZ selling to ABC. Then what will happen? The concept of profits will exist. Is it right? The concept of profits will exist. But once you have done a once you have acquired the company, is it right? They will not. This is the individual relationship. But once you are acquiring the company, parent company and the subsidiary company, the concept of profits will not exist. That non-existence profits is called as unrealized profits. Keep it in mind. Once we are doing the calculations, you have more clarity on this. Okay. Now, the next one, what we are doing, we are talking something about goodwill. Is it goodwill is what? Goodwill is very simple. Is it right? See, goodwill, we have to calculate goodwill also. Is it right? How we are going to calculate goodwill? Is it? How we will say what is the market value. Is it right? What is the market value minus what is the book value? Plus other things will be there. But this is if you are paying more than the book value, that is going to be called as a positive goodwill. If book value, if you are paying less than book value, is it right? Then it is called as a negative goodwill. You will have positive goodwill as well as you will have negative goodwill also. Is it right? Negative goodwill also. Is it? Means we have to take into consideration fair values. Fine. Now, what is there? The third aspect is we are talking. Last one is we are talking mid-year acquisition. Don't assume that. See what we have done. If we have taken this into consideration, it is called as a what? It is called as a mid-year acquisition. In the middle of the year, we have acquired it. Is it right? In the middle of the year, we have acquired it. Definitely, more calculations will be there. Is it right? We have to be very precise. We have to take into months. We have to take into days. Is it right? Those things will get involved. Is it right? This is the basic concept. Once we are doing a question in this, we will talk about all these factors: pre-acquisition profits, non-controlling interest, intergroup transaction, receivables and payables. We are talking about the goodwill and mid-year acquisitions. Is it right? Initially, they will give you a separate balance sheet, and our task in the examination is to prepare a consolidated balance sheet. Is it right? Consolidated balance. What it says? Is it? What is the basic principle? There is a basic principle is you have to the consolidated financial statement. It shows all assets and liabilities of parent and subsidiary. Okay. Whatever is there in the theory, I gave you the complete summary asset. Even if you have any doubt, you can stop me. You have intergroup items are excluded. Is that what are the things we have to exclude? We have to exclude payables and receivables. Is it right? we have to receive, we have to make adjustments on that. Okay, it will be easy, isn't it? Next, of the consolidated financial, only include amounts which we are going to get from the third parties. Okay, means you should not include the amount from the parent to subsidiary or subsidiary to parent company. Method of preparing consolidated financial position: the investment in the subsidiary shown in the parent statement of financial position and is replaced by what? Replaced by net. What will happen? You will have, is it right? You will see the thing. You will have, this is the parent company, is it right? Parent company financial statements. This is going to be a subsidiary company. Okay, this is, understand the thing. This is what may be important, is that you will have it. Now once you are doing this, what will happen is that the next stage is, you will not have subsidiary company, you will have only parent company. In the parent company, what you will do? You are going to show the share of the parent company as well as the share of the subsidiary company. Only where we are going to show this, we are going to show only in the equity, that's all. Is that we are going to show only in the equity as such. In other cases, we will not show. Other things what we will do, now you examine, you will have property, plant and equipment, is it right? You will say parent company, you will say subsidiary company. You will show you the total. Is that we are talking about only the total. In the same way, when you are talking in the things, you will say that yes, if you are talking about cash, is that what is the parent company, what is the subsidiary company, is it right? We are not going to say, we all, what we will do, we will add the things, is it right? If even you take into consideration non-current loans, non-current liabilities, is it right? Non-current liabilities, what we are going to say, what is the parent company share and what is the subsidiary. Only this area is very critical. Okay, this area is very critical, because all the adjustments will have impact at this point only. Okay, we will do that. Is it? Now what it says, the net assets of the whole group, parent and subsidiary, the share capital of the group, which always equal to the share capital of parent only. Share capital will be only for the parent company. Now for the subsidiary company, it is going to be called as what? It is going to be called as a non-controlling interest. We use the word NCI. Is it right? We use the word NCI. Concepts are very important. Is it right? Calculations are more important, but concepts also equally important. The retained earnings comprises of what? The retained earning comprises of the historical profits of parent company, and see the thing, post-acquisition profits. I told you just now, pre-acquisition profits and post-acquisition profits. See what happens, the parent company, is it right? Parent company can control, okay, can control only, is that only post-acquisition profits. See, after I am purchasing, whatever the profits is there, that belongs to me. Is that I cannot say that yes, the profits which is before, on that also I will have a stake. No, we cannot do that. Okay, we have, if I am purchasing today, the profits after the date of purchases will be shared by the parent company and the subsidiary company. Is it right? This is the basic way of working. Okay, that's what it says. Now you understand the thing. We are talking about the pre-acquisition, post-acquisitions. We are talking about non-controlling interest, intergroup trading, goodwill, and unrealized profits. Slowly we will, the moment you are going to work on each aspect at a time, we'll come across various things as such. Is it right? Now what it says is that what it says, like this they will give. Is it right? Like this they will give. They have given what? Parent company and subsidiary company. See the thing, investments is how much? 50. Is that you will not have investments here. Here you will have investment in the parent company. Means what is this? This is the investment parent company has made in which company? Subsidiary company. How much they have invested? They invested 50,000. Is it right? They invested 50,000. It never you will have like this. Is it right? On the subsidiary company, you will not have any value as such. You have the current assets, ordinary share capital, retained earnings, and current liabilities. Is it? P acquired 100% of the shares of S Limited when they have purchased on 3rd December 2004. What is the cost they have paid? They paid a cost of how much? 50,000. Is it? They paid a cost of how much? 50,000. Now, fine. Now, how many shares are there? They have 40. Is it? Their ordinary shares are how much? This much. Is it? And they have paid how much? They have paid 10,000 more. Solution. No. How much? This is 110. This is 80. This is 100. This is 30. And this is 7. How much? 60. Okay. Now, first you have to make sure, is it right? Calculation of goodwill. Purchase consideration. Is it? First you have to take purchase consideration. This has not been given in the textbook, okay? But we have to do like this. How much they have purchase consideration? 50,000. Is that how much is the purchase consideration? 50,000. What is the less? Is that value of investments? Is that value of equity shares? Is that value of equity shares? How much is the value of equity shares? Value of equity shares are how much? 40,000. Okay. Value of equity shares of S Limited. Is it? Value of equity shares of S Limited. How much? 40. Fine. They have acquired 100% of the shares. 100%. Is it right? Now 100% means definitely they have some profits are there. How much? 10. Is it right? They have the profits are there. That also they have got it from, they have that control over the profits also, retained earnings, before it has been happened. Is it right? Means these profits are there as on 1, these profits are there as on 2004, and then they have purchased the 31st December 2004. Is it right? You have retained profits. You can put it like this: pre-acquisition profits. Is it right? Pre-acquisition profits. How much is the pre-acquisition profits? 10,000. Is it? This belongs to you. You are paying for that profits also. Is it right? Means at this point of time, neither you have a positive goodwill nor you have a negative goodwill. Is it right? Neither you have a positive nor you have a negative. Fine. This is the first step. Okay, every question will have a process like this. Now what you are doing, you are making a consolidated balance sheet. Is it consolidated balance sheet of P Limited only? We are not taking into consideration S Limited. Is it right? For as on, is it right? As on 31st December 2004. Is it as on 31st December 2004? Is it particulars amount. Now what we are doing, we have, see, the consolidation means what? Nothing is there for the subsidiary. Is it right? We have to show it separately, but technically speaking, the control is with what? The control is with the parent company only. Is it right? Now, non-current assets. See, every question you have to write like this only. Non-current assets. P Limited, S Limited. Okay? Non-current assets. P Limited is how much? 60,000. S Limited is how much? 50,000. Total will come to how much? 110,000. Fine. Next, you take into consideration current assets. P Limited and S Limited. How much is the current? We will not take investments. Okay, we will not take investments. See, why will I will put like this? Is it right? We will not take investment because investment is on note 1. Is it right? It is on note 1. Here we have taken the investments. It is in the note 1, working note 1. Okay, we have taken investments of how much? 50. We have taken the investments of 50,000 as such. Is it right? Already we have taken it. Is it? We will not take. We have to eliminate it. Is it right? We have to eliminate it. How much is there? If we take into consideration, this is 40,000. Is it? This is 40,000, and S Limited is how much? S Limited is also 40,000. Total current assets are how much? 80,000. Is it right? You don't have anything. We will not have investments in the consolidated balance sheet. 100%. Okay. How much is there? It will come to 190. Fine. Next. Is it? Now you see, this is most critical. Is it right? Equity and liabilities. Is it? Equity and liability. How much is the ordinary shares? Yeah, only P Limited. Okay, we are not taking anything with respect to what? With the subsidiary company. How much is there? 100,000. Fine. Next, retain earnings. Is it? Retain earning. Again, we are going to take only P Limited. Already we have taken in working note 1. Okay. How much is there? It is how much? 30,000. Is how much? 30,000. Whereas, is it? Current liabilities. Is it? Current liabilities. How much? In current liabilities, we'll take both, because see, you are when you are taking the assets, you are supposed to take the liabilities also. Is it right? P Limited is how much? Current liabilities. It is how much? 20 and 40. Is it right? It is how much? It is 20,000. Is it right? And it is how much? It is 40,000. Total comes to how much? 60,000. If you do the total, how much you will get? You will get 190,000. Are you clear about this?
Yes,
Is that simple? Is that now? Step by step we will progress. Okay, step by step we will progress. That's what we need. Okay, the moment you are going another examples, definitely we are going to. What is the mechanics? How it will work? See the thing. They will mention in the previous case they said how much? They said 100%. Is it? But usually a standard group accounting financial reporting question will provide the financial statements of parent and at least one subsidiary, and will require to preparation of consolidation. Is that what we have to? What is the best approach? Standard working. For workings only marks are there. Just imagine, for the workings marks are attached. Is it right? What happens? The workings below assume that the acquisition, how much they have acquired, parent and company has acquired how much? 80%. Is that? This shows that it means the parent own 80% and the balance 20% is owned by whom? The parent's 20% is owned by the subsidiary. They will first and foremost, they mention that what is the percentage of acquisition, how many shares they have acquired, and you have to make it sure that how much it is, in 60, 70, 80, whatever it is. Because on this basis only all the calculations has to be worked it out. Is that? All the calculations relevant to that. Is that? Now what are the things we are considering? Is that the first working is what? The first working is we have to establish the group structure. Understand? But the first working is we should know what is the percentage of group structure, 80, 20, 70, 30, whatever. That is the first working. Standard. Is that? The second working we are talking in terms of net assets. Is it right? What is the net assets? We have to take into consideration net assets of whom? Assets of the subsidiary. Is it? At the date of acquisition, what are the things we will take? Net assets. We take share capital, reserves, share premium, retained earnings, and revaluation. Fine. Next, at the acquisition, at the reporting date, is it right? On the date of when it is going to be reported. Is that means when it is going to be consolidated. Okay, when it is going to be consolidated, that is the reporting date. Is it? We'll take those things. And post acquisition, after that, I told you, this is very critical. Is it right? Very, very critical. Is that you are buying, you are taking into consideration on 31st December 2021. Is it right? These profits is called as pre-acquisition, and these profits are called as post-acquisition. Pre-acquisition profits belongs to the non-controlling interest, to the subsidiary only. Post-acquisition profits will be shared. Is it? Will be shared between parent and subsidiary. Is it? Parent and subsidiary. Is it? That is the most important thing we should take into consideration. Is that what they say? They mention working two shows that the value of subsidiary only, not at all with respect to the parent company. Fine. At various points of time, is it? And when you are doing the things, they will give an approximation for what? Fair value. They will give in the question that this is the fair value of the assets. This is the fair value of liabilities. Is it? The first column is the fair value, which can be calculated which can be used to calculate working in goodwill 3. Is that working with respect to goodwill 3? The second column shows the fair value about the net assets, and the final column is talking about what is the post acquisition movement. Is that means after the acquisition? Is that after the acquisition what are the profits? Is that? So we have to be very, very scientifically, we have to segregate this. Now what happens, how it will work? That is the second one. Second, what is the first one? Is the percentage of profits. Is the first one is the percentage of acquisition in terms of equity shares. Second one is we are talking in terms of the net assets of the subsidiary at the date of acquisition, at the reporting date, and subsequently post acquisition. The third one, what is We are going to calculate what? We are going to calculate the goodwill. Is it? What we are doing? See that what is a goodwill is the nothing but parent holding investment at the fair value. Is it right? Previously they used to talk about market value. Now we are to talk about fair value. Is it right? Next, what happened? What is the non-controlling interest of acquisition? Is that how much we have non-controlling interest at acquisition? What is the moment we say non-controlling interest is belongs to whom? Belongs to the subsidiary. Yeah. From this, we have to deduct what? Net assets. Is it? Fair value of net assets of what? Fair value of net assets of acquisition. Where we have identified this? We have identified this in the working 2. Is it right? We are working by at the date of acquisition, reporting date, and subsequently post acquisition. Just remember the format. In the next question, we are going to implement the same procedure as such. Is it right? Now, definitely, if you take the parent company share, that is the fair value, non-controlling interest at acquisition. What is the non-controlling interest? We have to add up. And we have to reduce what? Fair value of the assets. Is it right? Either you can have the liability approach or you can have the asset approach as per your requirement. Nothing will happen. Concepts are clear. Doesn't matter how you are doing. Okay? Doesn't matter how you are doing. And concepts are clear. Workings should not be missed. That's very important. Because even whatever happens in the answer, more than that, if your workings are right, you will get full marks. Full marks you will give. They will never hold the marks on that. Is it right? We will get goodwill, and sometimes if there is any impairment, definitely impairment will be deducted. Is it? This is going to be shown is what? This is going to be an intangible asset. Fine. This is the second one. Okay. Now, is it mostly? Is it right? When you are talking about the goodwill, I want to just mention that these calculations belongs to whom? This calculation belongs to the parent. This calculation belongs to the parent. Subsequently, if you go further, is it right? They say if the fair value method is adapted, fair value of non-controlling interest at acquisitions, we will do. Is that just going through this theory now? I will get back to you when the moment will start. Is it right? If goodwill is negative or goodwill is positive, there will be both the option. Goodwill will be negative and goodwill will be the positive. Yeah. What is the working 4? Working 4 talks about what? Working 4 talks exclusively about what? Subsidiary company. Is it? Subsidiary company. What is a non-controlling interest at acquisition? We'll take what is the reserves or profits are there of the non-controlling interest. Assume now you can make it a point. Is it right? What they say, if it is 80% belongs to whom? Assume 80% belongs to the parent company. The balance 20% of shares. Is it? 20% of share belongs to whom? Belongs to the subsidiary company. This is the point we are going to segregate. Is it right? We are going to divide the assets or liabilities or net assets based on what? Based on the percentage of acquisition. Is that? This is the point. The point number, first point is the ratio. Is that? First point is the percentage of acquisition. Second point is nothing but the non-controlling interest of what is the amount of the subsidiary. Third point is we are talking about the goodwill. Fourth point we are talking about the share of the subsidiary in the form of non-controlling interest. Is it? The fifth one is what we are talking in terms of, we will combine. We'll combine the retained earnings. Is it? We are combining the parent company retained earnings. Is it? We are combining the parent company, parent percentage of post acquisition. See the thing. If you have taken 80% of the stake equity, then parent company will take 80% of the post acquisition profits, not pre acquisition. Is it right? As simple as that, very simple. You have taken 80%. Is it? Whatever the future business you are doing with the subsidiary, in the future business you can claim 80% of the profits, and the 20% will go to the subsidiary company as such. Is it right? If there is any share of impairment, is that we have to deduct it. Is it? This is what we are talking about. This we are talking in terms of what? In terms of retained earnings. Five steps are there. Maybe it will be added another unrealized profit. Okay, it will be added unrealized profit. Totally, we will have 7 steps workings. Is it? Totally, we have 7 working. The first working is what? The first working is the percentage of acquisition. The second working is net assets of the subsidiary. The third working is the goodwill. The fourth working is the non-controlling interest, share of non-controlling interest, and the fifth one is the retained profits. Is it? Group retained profit. These 5 adjustments, if it is for 20 marks, these 5 adjustments will be for almost 8 marks. These adjustments will be for 8 marks. That's in the example 1 what we have done. We have said that the net assets are how much. In the example 1 we say that the net assets is 50,000. This will not always be the case. It is that far that we have done okay for our understanding. Is it right? What is the cost of investments minus net asset value of subsidiary? Cost of investments assume 50,000. This is only an assumption, is it right? I am giving you an example as such. Cost of investment is how much? 50,000. Now net assets, I am taking an example. Net assets are going to be how much? 35,000. The balance of 15,000 is going to be identified as a goodwill. Is that? Is going to be identified as a goodwill. First or second problem, it will take time. That's all. Because I want to explain it in detail, it will. From the third problem onwards, it's a piece of cake. Okay, it's very easy. Yeah, where less than 100% of subsidiary is required. The following the value of the subsidiary comprises of 2 elements. What is the value of the parent and what is the part acquired by the parent. You are as a parent company, you acquire a portion of subsidiary. That portion of subsidiary is going to be called as a NCL. There are 2 methods. One is proportion of net assets and the fair value. Is it right? In either case, we can work it on in most of the time. They will usually they will not say, but in the examination, in the question, somewhere they will put it very clearly whether it is a fair value or whether it is a net assets value method. Is it? Now, why people are going for this? That's very important. Is that which IFRS will matter here? IFRS 3. Write down somewhere. Okay. Write down in one of the books. You put all the IFRS Is it IFRS 3, IFRS 13, is it right? IFRS 5, we have done IFRS 3, we have done IFRS 5, we have done IFRS 9, we have done IFRS 13. Is it right? Those are going to make sense, isn't it? Now they say that all business combination other than joint ventures are number of unusual items. Fine, we are not concerned about that right now. Okay, is that we are concerned about how we have to treat the goodwill. Either you will have, see that the goodwill is an asset. Is it right? Goodwill is an asset. That's very important. Capitalization of intangible non-current assets. Is it? We have what goodwill is a asset. Always it has to be debit. But make it a point where whether it is in the parent company or whether it is in the subsidiary company. Is it? Now, what happens to the goodwill? Is it? What happens to the goodwill? See the thing. You have ABC company, okay? You have XYZ company, okay? ABC company is profitable, is it right? XY company is the losses, is it right? Is the losses. Now, what happens whenever we make it a point, whenever a profitable company is going to, all the time, in most of the cases, the subsidiary company is not that much healthy. I'm not saying losses, that will not be that much healthy. The moment a profitable company will acquire less profitable company, is it? Less profitable company, what will happen? The goodwill of the parent company will decrease. Is it? The goodwill of the parent company will decrease. This process, is it right? This process is called as impairment. Fine, we'll do that. Okay. Now, the impairment of positive goodwill, how the goodwill will reduce, is that proportion of net assets. In the working 5 we have done the group retained earnings. In the working 3 we have done the calculation of goodwill. Is that's what it says. If you take into consideration if it is talking about in terms of that two proportion of net assets and the fair value. If there is any impairment, is it right? If there is any impairment as such, is it right? Then only this accounting for the impairment differs from the policy. Is it? If there is an impairment, definitely what will happen? Goodwill will decrease. Is it right? Goodwill debit all expenses and losses, credit all incomes and gains. Whenever the asset decreases, is it right? Whenever the asset decreases, it should be on the credit side as such. Is it? Just keep it in mind. Things will work. Okay. Negative goodwill. Very simple. Negative goodwill is nothing but what? See the thing. If you are purchase consideration, is it right? Purchase consideration, the amount we are paying, purchase consideration is 10,000. Is it right? Net assets of the subsidiary, okay? Net assets, assume that it is going to be 8,000. Means how much you are paying more? You are paying more of 2,000. Fine. Next, or is it right? Or what is that? See, your purchase consideration is how much? Your purchase, is it? Your purchase consideration is how much? Your purchase consideration is assume 8,000. Is it right? Book value is what is the net assets value? Net assets value is going to be 10,000. Is it? Now what will happen? You will not get positive, you will get negative. But I'm telling you this with all my experience. Is it right? You will have 99% positive goodwill only. If there is anything in the MCQ, they will be asked for the negative goodwill. But in totality, it will be only what? It will be only the positive goodwill. Is it? It will be positive goodwill only. Is it? You have, when we are talking about the group reserves, this is the explanation they have given. When you are talking about the goods reserve, we are very much concerned about what? Post acquisition profit. Everywhere. Is it? We are talking about post acquisition profits in retained earnings, post acquisition profits gains in the revaluation, post acquisition profits in the statement of profit and loss account also. Means that's the reason. Right? The moment we are talking about the parent company and the subsidiary company, see, they will really do all the experiments with the subsidiary company. Okay, each and everything. They will say that the 80% belongs to parent company and 20% belongs to the subsidiary company. Fine? Now, what is the non-controlling interest? NCI is we will do NCI in every question. Every question. See, goodwill belongs to whom? Goodwill belongs to the parent company. Okay, NCI belongs to whom? NCI belongs to the subsidiary company. That's all. More than that, we don't need anything as such. Okay, NCI belongs to the subsidiary company. That's what it says. In some situation, parent may not own all the shares in the subsidiary. They own only how much? 80% of the ordinary shares. Then there is a non-controlling interest of how much? 20%. Is right? This is what it says. We have to make sure that how much is that is the reason. How much is the percentage? See the thing, working note, is there working note 1, okay, working 1, just imagine, it will be almost 2 marks. Is that? It is almost, because entire concept, if it is not 2 marks, at least they will give you 1 mark. Only for what you have to mention working note 1, you have to say parent company, you have to write like this, understand what? You have to write like this. You can say that how much is there? It is 75%. With 1 or 2 sentences of the explanation. Right? Don't write only just that. The parent company owns 75%, acquires 75% of the shares of the subsidiary company. The profits and losses of the subsidiary company will be shared at 75% and 25%. This much you have to write. The moment you write it now, they will give you full marks. Automatically, that much weightage has been given for this. See the things. Is it? Now, how it is working? Is it? How it is going to be worked out? A full-fledged question. Is it right? A full-fledged question. 1 minute. Is it? Yes. You have they will give you a things. The most important first thing what you have to say, you have to think about investment. How much is the investments are they? Investment is how much? 60,000. Is it right? Investment is 60,000. Immediately, see, your task is to consider these things only. Understand? Your task is only to consider these things. As simple as that. You are not going, we are going to add that. Okay. How much is the equity? 20,000. Share premium is 10,000. Retained earnings is how much? 25,000. Others, is it right? Other things will, that doesn't matter, is it right? Property and plant equipment, you will add it, subject to any adjustments. Current assets, you will add it. Okay. With this A investment, is that this is the balance sheet before, is it right? Once you have acquired the company, what will do? You will eliminate. Getting your point? See the things. Right? I will write here. You will eliminate. Is that what you will eliminate? Eliminate investments. Is that eliminate investments on which side? On asset side. And you will, what will eliminate? Subsidiary company. Is that subsidiary company? What you will eliminate? You will eliminate equity. Is it right? You will eliminate any profits. Is it? And replaced. Is it? And replaced with what? And you will replace with non-controlling interest. I just had a water, okay, glass of water. Fine. Okay. Now, this is what the basic concept, is it right? Now, what they have said, they have acquired how many shares? 16,000 shares on when? 1st January. When the retained earnings are how much? When the retained earnings are 20,000. Okay. And share premium is how much? 10,000. Is that okay? Fine. You are talking about, see, focus on this. Retained earnings are 10,000 is the share premium. Retained earnings are how much? 25,000. Fine. 25,000 is the retained earnings. Now, of this date, the fair value of 20% non-controlling interest is how much? The fair value of 20% non-controlling interest is 12,500. They have mentioned here based on the fair value method. Is that based on the fair value method? You have to work it out. What is the first working we have to do? Is that first working? Is that make it a point? Is that the first working is working 1, working note 1. Is that working note 1? You have to write like this. Is that group structure? Group structure. How many? See. What is that? How many shares are there? 20,000. Is it right? Shares of how much? Shares of subsidiary. Shares of Jones. Is it how much? 20. How many they have purchased? They have purchased how much? They have purchased by Dickens. Is it? Purchased by Dickens how much? 16,000. Percentage of Dickens. Is it? 16,000 divided by 20,000, it comes to 0.80 or 80%. Is it? Share of Jones. Is it right? Share of Jones. As simple as that. 100 minus 80, it comes to how much? 20%. In the group structure, you have to write like this. This is what you have to show it. We have to show it very clearly. Is it right? This is one. How much is the parent company is 80%. The subsidiary company is how much? 20%. Fine. Next. Yeah, we need lot of space. Okay, fine. We need lot of space. Is it right? We need lot of space. 1 minute. Is it right? I will write. Is it right? Working note 2. Is it right? Working note 2 for this. Okay, don't get confused. Working note 2 for this. Okay, now is it what they say? Working note 2. Working note 2 talks about non net assets. Is it right? Net assets of what? Net assets of subsidiary. Is it right? No, it's not coming. 1 minute. Is it right? Working note 2. Is it right? Net assets. Is it right? Net assets of net assets of Jones. Is it net assets of Jones? Is it right? Next. Is it the 1 minute? 1 minute. Just I want to make it sure. Okay. Just I want to make it sure. You have 1 minute. You have particulars. Is it right? You have particulars. You have particulars. What is the format they have mentioned? Just I will go through the format. Okay. What is the format? At the date of acquisition, at the reporting date, post acquisition. Is it right? At the date of acquisition. Is it right? At the date of acquisition. First is acquisition. Is it? The second one is reporting date. Is it? The second one is reporting date. And the third one is what? They talk about the post acquisition. Fine. Now. Okay. Now. First, what we have to take, see, they have not mentioned anything, is it? They mention any stuff, yeah. Share capital, reserve, share premium, retained earnings and revaluation surplus. Okay. Share capital, reserves, share premium, retained earnings and revaluation reserves. Okay. Means you have to take the equity only. Fine. Now, how much is the, we don't have share, you have share capital, you have share premium, you have retained earnings. Is it right? You have share capital. Is it right? How much you have? We have the share capital. Is it right? How much is the share capital? Share capital is how much? Share capital is 20,000. Is it right? On the day of acquisition, see the thing. On the day of acquisition, how much is the share capital? It is 20,000. Is it right? You have the share premium also. Is it right? We have the share premium also. How much is the share premium? 10,000. Is it right? How much is the share premium? 10,000. Is it? You have retained earnings also. Is it? You have retained earnings also. Retained earnings, they have mentioned something. Is it right? What they have mentioned on retained earnings are how much? Retained earnings are how much? 20,000. Is it? Retained earnings are how much? 20,000. In the example they can mention 25. Fine. That is means it includes post acquisition and pre acquisition. Okay. Total retained earnings. But as on the date when they have purchased, how much is the retained earnings? 20,000. Fine. Means how much you have to take? We have to take 20,000. Fine. We have to take how much? 20,000. How much you will get there? 20 plus 10 plus 10. It comes to how much? 50,000. Reporting date. As on the reporting date. Reporting date is what? Reporting date is 31st. Is it right? What is the reporting date? Reporting date is 31st December. Is it right? 31st December 2008. Is it right? 31st December 2008. On the reporting date, how much is there? 20,000 is the equity, 10,000 is the retail share premium, whereas what is the retained earnings? 25,000. Is it right? How much is the retained earnings? 25,000. Total comes to how much? 25. Now, here you don't have any difference. Here you don't have any difference. Here the difference is how much? 5,000. Now you understand what is the post acquisition, what is the pre acquisition. Is it? 5,000 is the post acquisition. Is it right? 5,000 is the post acquisition profits and 20,000 is the pre acquisition profits. Is it right? Is it okay? Now, are you clear about this? Fine. Is it? Working note. What is the working note? Working note. See, we follow this structure very precisely. Is it right? There is no plus, there is no minus. Is it right? Working note is what? 3 is goodwill. Fine. If you are thorough with 2 or 3 questions, it's very easy for us. Is it right? Now, how much they have invested, parent company. Is it right? How much they have made the investment? How much they have paid? That's very important. Is it right? How much is the investment? Investment is 60,000. Understand point? Investment is how much? Investment is 60,000. Fine. Now, is that parent company holding? Parent holding. Is it parent company holding? In terms of what? In terms of investments. Is it? In terms of investments at fair value. Is it at fair value? How much is there? 60,000. Okay. How much is there? 60,000. Now they have mentioned it here that NCI, non-controlling interest, fair value. How much? 12,500. Is that? They have mentioned what we have to do? NCI at acquisition. Is it? NCI at, we have to, what we have to do? We have to add. Is that? We have to add non-controlling interest at the date of acquisition. Is it? Again fair value only. Okay, non-controlling interest. Non-controlling interest is how much? 12,500. Is it? How much you will get? You will get how much? 72,500. Is that how much you are getting? 72,500. Is that 72,500? From this, is it that what we have to do? We have to take into see what is there. You have done acquisition. Is it right? fair value of net assets at acquisition, working note 2, is it right? Where is a very structured one, is it right? Minus, is it right? Fair value, is it right? Fair value, is it right? Fair value of net assets, is it right? Fair value of net assets at acquisition. See, is it right? What you have to do? Working note 2, is it right? Working note 2. How much is there? You have second column. How much is there? 50,000. Is it right? 50,000 minus that 50,000. How much you will get? What is the difference? You are getting a difference of how much? 22,500. 22,500 is otherwise called as goodwill. Is that 22,500 is other? Now you understand? Parent company holding investments. Is that what is given in the assets? 60,000. What is the share of parent company? Date of acquisition. They will give 12,500 total. This much is the value. Okay, 72,500 is the value of the subsidiary. Of this 72,500 value of the subsidiary, for 80% of the share, how much the parent company is paying fair value of the, what is the value of the assets at the date of acquisition? Value of the assets at the date of acquisition is 50,000. We are paying 72,500. Value is 50,000. We are paying more, 22,500. That 22,500 is otherwise called as a goodwill. Okay, now, fine. Working note 4. Okay, working note 4 is what? We have to take NCI, non-controlling interest. Non-controlling interest of the minorities of the subsidiary company only. Okay, now what is the NCI value? Is it at NCI value at acquisition? They are given in the notes. Is it right? How much is the NCI value in the acquisition? It is how much? 12,500. Add, is it right? Percentage of post acquisition profits. Is it right? Percentage of post acquisition profit. Post acquisition profits are how much? 55,000. How much is the percentage? 0.20. Is it right? 20%. It comes to how much? 1,000. Is it? It comes to how much? 1,000. 13,500. Is it? 13,500. Fine. Now you understand first what we have done. First we have done with respect to the group structure. Is it right? First we have done with respect to the group structure. Second we have done with respect to the net assets at the time of acquisition. Is it? Second is net assets of Jones at the time of acquisition. Third one is we have done goodwill. Fourth one we have done with respect to NCI. Now, what is the fifth one? Is it? Fifth one. Is it? Working note 5. Is it right? Working note 5. What is the working note 5? Group retained earnings. Is that group? See, you understand this question. You understand this question. Other things really, trust me, really you will find very easy. Is it very easy? Nothing is there. Just you have to work out on the steps. Is it right? Now, what is the parent company? What is the parent company? Is it right? Parent company retained earnings are how much? Parent company retained earnings are how much? You go here, it is given how much is the parent company? 70,000. Is it right? Parent company retained earnings are how much? 70,000. Fine. Now share of post acquisition profits. Is that share of post acquisition profit? 5,000 into 0.80, 80%. Is it right? How much you'll get? 4,000. If you add it, it comes to how much? 74,000. It comes to how much? 74. Fine. That's all. Nothing is there. Is it right? We have done all 1, 2, 3, 4, 5. Is it right? We have done 1, 2, 3, 4, 5. Is it? Now, is it? Now we have to make a consolidation. Is it? Consolidated financial statement of financial position. Is it? As on 31st December 2008. You put like consolidated statement of financial position of P Limited, not P. Sorry, it is which one? It is not P. It is what? Which company it is there? It is Dickens. Is it right? It is what? It is Dickens, of Dickens. Fine. Now, is it? Particulars. Is it right? Particulars, amount. Okay. Fine. Now, what we have to do? We have to take only P Limited. Okay. Non-current assets. Is it right? Non-current assets. Okay. We have to show it separately. Is it right? We have to show it very clearly. Is that before we show non-current assets? Is it non-current assets? First, what we have to show? We have to show goodwill. Okay. Note 3. Is it right? How much we have calculated goodwill there? We have calculated goodwill how much? Note 3. 22,500. Is it right? How much we have calculated? 22,500. Is it right? 22,500. Fine. Next, property, plant and equipment. Okay, P. How much is the? How much for the Dickens? Is it right? How much is for the Dickens? Dickens is 85,000. Okay. Jones is how much? Jones is how much? 18,000. Okay. We are not doing anything else. Is it? We are the total. How much we'll get? 0,08531,103. Is it right? 103. Next, what is the? We will not take investments. Okay, we will not take investment. Investments will be eliminated because investment we have done in where? Investment we have done in where we have done the investment? We have done the investment in working note 3. Okay, we have taken investment on where? Working note 3. Again, we will not take that investment. Is it right? Now, what is the? You have current assets. Is it right? You have current assets. How much is the current assets? Dickens. You have to write. Okay. Dickens. How much is the Dickens? 160. Is it right? 160. Jones is how much? Is it? Jones is how much? 84. Is it right? Jones is how much? 84. Total it comes to how much? 0,004 4 2. Check. Good. What is the total of this? 23,500, 103, and what's happened? Total assets. How much you will get total assets? 22,500. This is 500. Okay. 4 plus 3, 7. How much? 369,500. Okay. How much? 369,500. Okay. Now, equity and liabilities. Today we will do this. Thursday we will do this. Okay. Today and Thursday we'll do. Thursday also we only focus on this. Okay. And on Friday we'll do ratio analysis. Okay. And after that we'll start repeating this. Is that? We'll not stop here. Is it right? We once we get the concept, we will move further. Is it right? Now, equity. How much is the equity? We'll take only parent company. Okay, we'll never take into consideration subsidiary company. Don't ever. Is it right? How much is the equity? Equity is 65,000. So only P. Okay, only we should not write that. Okay. Now, share premium is also how much? Share premium is also only P Limited. Okay. How much is the share premium? 35,000. Fine. Next. You have group retained earnings. Is it right? Group. Note 5. Is it right? Note 5. How much we have done? Note 5. 74,000. Okay. Now, here we have to make it a point. Is it right? Here we have to make it a point. What we have to do? Yes. Is it? Non-controlling interest. Is it right? Not how? Which one? Note. Is it right? Which one? Note 4. Is it right? Note 4. How much is the non-controlling interest? 13,500. Is it right? What is the total you will get? $500, 10, 14, 17, 187, 500. Is it right? Next. What you have to write? You have to take, nothing is there, only current liabilities. Is it right? Current liabilities is there. Is it right? Current liabilities. See, in the examination, if you put only in the brackets also, nothing will happen. Okay? But better write. Dickens how much? Dickens is 135. Is it right? Dickens is how much? 135. Whereas Jones is how much? Is that Jones is how much? 47. Is it right? Jones is how much? 47. How much will get? How much will get? 0, 0, 0, 2, 1, 8, 182. Good. Is it right? Good. How much? What is the total of these two? 0, 0, 5, 9, 16, 1, 369. Is it clear to you?